So let me just start by asking you, how long will this pause from rate cuts last?
Well, the last time we adjusted was way back in June, and I said that for as long as the crisis is ongoing, I think this is not a sprint. This is a marathon. So I think we won't ease until maybe we see things normalize, which means unemployment being at about 5%. And growth at around maybe 6%.
With real interest rates below zero, how much room do you really have to continue easing, though?
No, our policy rate right now is 2.25%, so we still have lots of room. And our reserve requirement is around 12%, one of the highest in Asia. So we still have some room for monetary easing if there is a need for it.
Given where inflation is right now, what about real interest rates, though?
We've experienced negative real rates in the past, and so that doesn't worry us. So we just look at our primary mandate is price stability and financial stability. So as long as we are within our target range, inflation target of between 2 to 4%, and that's okay for us. Right now, our outlook, inflation outlook, is that inflation will be in the neighborhood of 2.3%. That's down from the original forecast of 2.6% for this year. And our forecast for the next 3 years, 2020, 21, 22, it will be anywhere between 2 to 4%. So we're comfortable with where we are right now.
Governor, I want to throw up a chart for our Bloomberg viewers showing the state of the economy and just how much need there is for further monetary and potentially fiscal support. Economists seeing the Philippines as the second worst hit economy in Southeast Asia in 2020, just behind that of Thailand. That full year growth forecast, a contraction of 6.8%. So to that end, if rates remain steady, what kind of non-rate measures are available to you in your toolbox, and will they be more effective?
When the pandemic hit the Philippines, we have a very strong economy with average growth of 6% for the last 10 years. We have a hefty gross international reserves, and so the worst is over as far as we're concerned. Second quarter was the worst quarter. Things are picking up. In fact, the manufacturing managers index crossed the 50% line, and so it rose from about 47.3% last August. It's now 50.2 this September. So things are picking up, and so your question is, what's your question again? Hello?
I was asking about what sort of non-rate alternative measures are available to you and whether they would be potentially more effective than a straight-up rate cut.
No, right now we have actually done much earlier. In fact, we cut the rate as early as February. We cut the interest rate by 175 basis points, so that this interest rate that we have right now is the lowest ever in the country. Now, what other tools do we have? Right now, we are using the new measure that is mandated by law, which is to give cash advance, or we enter into a provisional advances to the national government amounting to close to $11 billion US. This is a short-term, time-bound facility, 30 days, extendable for another 30 days. And so this is being used for the first time, and we use this only under extraordinary times, and these are extraordinary times. So that's one thing, and there's another thing which was recently passed in the by law, another 10% also based on the same formula, the 10% of the average income of the national government for the last 3 years, but that has not yet been, the Department of Finance has not yet indicated whether they're going to avail of that additional easing.
Governor, as you say, these are unprecedented times. We're continuing to see multiple subsequent waves of the virus in various parts of the world. What makes you so confident that worst is over for the economy, and when do you see a return to a positive growth rate?
Okay, we actually had a very strict lockdown as early as middle of March, and that was meant to, for the national government to build the health infrastructure, and I think we built that. We have now health centers all over the country, and we have enough capacity. We have enough human resources to do that. We have doctors and nurses to do that, and so we're prepared for any surge. But as you know, we have actually controlled we have flattened the curve, and I don't see any possibility of a second or third surge. And in any event, as I said, we have the facility now, and so we're well prepared if there should be any surge. But the second quarter really was bad because the economy is practically shut down. So, but now things are picking up. The third quarter will be much better than the second quarter, and the fourth quarter will be much better than the third quarter.
When you say much better, when will it turn positive?
Do you see a return to growth in the fourth quarter?
The third quarter will be less negative than the second quarter, maybe negative 9%, but we see some possible growth in the fourth quarter.
Okay, so if that's what you're saying, does that mean that you won't need to look into another tranche of cash advances?
That's a possibility. In fact, the 540 billion pesos or 11.1 billion US dollars that we are giving the national government at this time, they will pay that before the end of the year.
So you won't need another tranche of cash advances, another leg of deficit financing to help out the government?
I don't know. They may still need that because of the decline in revenues and higher spending. In fact, we have actually increased our planned spending from 3% initially before the crisis to right now around 9%, and that the deficit will be 9% of GDP. That's the deficit for this year.
Does it worry you if you continue to help out the government that the central bank's independence will be questioned?
For as long as there's a crisis, we will continue to help the national government. We're part of the government, although we are independent. And independence, I mean, is defined as that we do not go to the national government to ask for our budget. We have fixed tenure, and we do not go through the political process of confirmation by the Commission on Appointment. So we're really independent.
Governor, finally, I want to get your views on the currency. The peso is on track for its best year since 2012. At what point in strengthening your currency will you not be comfortable? If it breaks to 48 to the dollar, is that still a level that you're okay with?
Well, we follow a flexible exchange rate policy. We do not intervene as a matter of policy, but we only intervene, or we go into the market just to ease the volatility. So if supply and demand of foreign exchange, or if the confidence of the international community continues and the peso goes to 48, we won't intervene, all right? Or if it goes to 51 yuan, we won't intervene. It's just we'll let the market determine the price of the peso. And this time, this is really very different. In the past, whenever there's a crisis, and I've seen many crises in my lifetime, we run out of dollars. Now we have hefty gross international reserves equivalent to 100 US billion US dollars. That's equivalent to 10 months of imports. So we don't intervene, as I said, as a matter of policy.